спілкування. Все, дякую вам. Enjoy.
Добрий вечір. Мене звати Сергій Лисов. Я сьогодні вам буду розказувати лекцію про фандрейзинг і ділитися своїм досвідом. Лекція передбачається в мене англійською мовою, тому, будь ласка, презентацію дайте мені. Okay, dear ladies and gentlemen, welcome at America House, welcome at EO Incubator. My name is Sergey Lysov. I'm one of the mentors at EO Incubator, and I'm an investment professional working since 2005. I've worked at one of the largest investment houses here in Ukraine, Dragon Capital. Before that, I worked and was at the roots of corporate finance practice at KPMG, one of the big four audit and advisory companies. At Dragon, I've managed one of their private equity funds. Have had assets and transactions of 70 million plus. For the past 2 years, I'm running my own advisory and investment consultancy business. I work with tech companies. I avoid word startups because it's got a little bit of bias on that. But let's say tech companies or new businesses, right? Growing businesses. This is what we all want to be, right? Growing business, earning money, this kind of stuff. So I advise on the business model, on the products, on going to specific markets, on addressing these markets, meeting the client demands, doing the product market fit, and also on the investment side, on fundraising, on working with investors, with professional investors, with angel investors. So that's kind of the area. How many people are from the EO Incubator here? All right, guys, glad to meet you. At the end, after the presentation, we'll have a small closed private thing where we'll have a task for you for the next week. So please don't leave early. We have to say. I'm glad also to greet all the guests. Thank you very much for coming. I hope this lecture tonight will be very fruitful and productive and informative for you. So let's start with the agenda. So maximum simplicity and straightforward. So I'll draw a general picture of the fundraising for VC. Then we'll go through the funding options and some hints and tips for the successful fundraising. KPMG lately published a fresh report. It's 100 pages long. There is a QR code here. You can download it at any time. And ask me for the presentation, or the organizers will send you. If in case you need the presentation, let me know. So KPMG recently published a VC report outlining. They do it quarterly. It's a second quarter report for 2019. They outline key trends which happen in the VC fundraising thing. So some trends are ongoing, some trends are fresh. So investment in US and by US venture capital and into US-based companies and startups is still prevailing. It's still #1 location in the world, and this is something which you should know. Hence, you are actively fundraising. Number 2 is that Europe is still, the old world is still a very significant location for fundraising for your tech company. Despite the Brexit uncertainty, the amount of deals, the amount of activity, the amount of new funds being closed still is maintained. India rises and China slides. There's been a certain slowdown in China, which was compensated by the activity in Southeast Asia region. Sea region, right? Hong Kong, Singapore, Malaysia, Philippines, etc. India is a very booming region nowadays. India has got lots of deals. They have some specifics which are in that specific market, but it's a really growing region in terms of venture capital fundraising. AI is the talk of the town. So AI-based startups, which implies that AI-focused, AI-based startups, artificial intelligence and machine learning is the, so to say, whatever you use it for, medical or so compiling new drugs for pharmaceuticals, or you use it for robotics, or you use it in production, you use it in smart city, whatever. AI is something which, if you add it to your hashtags for your startup, that it will be an eye catcher. There is a joke. Anyone knows what's the difference between AI and machine learning? Artificial intelligence, machine learning. You know this joke. Yeah, so artificial intelligence, machine learning is done in Python usually, and artificial intelligence in PowerPoint. So that's the joke, but in any case. Speaking of the other sectors, fintech's been on the VC scene for quite a long time. It's still hot. It's still very interesting. I yesterday read an article from Reuters, published on Reuters, about a recent activity of banks in South Africa, where they suddenly, all of a sudden, discovered that there are even large communities out there which don't use banking accounts but use really a lot of cash. So they are now pivoting their model. They are looking at this market and developing products to address these cash-rich businesses, cash-based businesses, which have been absolutely overseen by the banks before. So the financial industry is very rapidly changing nowadays with the technology, with the globalization. So fintech is really on the scene. EdTech, specifically in India, it's a very hot topic, and this is a hot topic becoming really, really heated all over the world. Because with the robots, people are losing jobs, workplaces, so they need to be retrained, they need to be entertained, and this is one of the really large things impacting the consumer market. So education and entertainment are two things. I think I don't have entertainment here, but it's also very important. These two industries are also eye catchers and very hot for investors, for VC investors. Health and pharmaceuticals are also a very, very attractive one. And food and agriculture, delivery of food, delivery of whatever, optimization of logistical routes, these are all very, very hot topics. This doesn't mean that if your startup or your business does not get into these categories, you have zero chance of raising funds. What I'm saying is that these are the most hot topics, and some investors will most likely filter you, right? So if you don't have any of those, they say, okay, we do only AI and fintech, that's it. So please watch for that. I'll be stopping on these specifics of investors later in my presentation. Okay, this is not very readable, but still, this is a graph which was presented by Ernst & Young in their venture capital barometer, which is in different forms. You may find this graph in books. It generally describes the startup financing cycle. We have, I'll test the laser. Okay, so we have income on the y-axis, and we have the development stage, the time on the x-axis. This is basically the death valley of a startup, right? When it loses money and its cash burn is over the recurring revenues. And then you go, at this point of time, you go to break even, and then you start the growth of profits in your company. So the names of the rounds, I'll be absolutely frank. In my practice, I've seen different ones. So if someone tells you, or you feel that you're raising a seed round, but somebody tells you, no, you're raising a pre-seed, or you're probably raising a round A. This is very blurry, right? This names of the stages, and then after the startup stage, you have round A, B, C, D. Recently, I heard from one VC fund that there is a company in US which is raising round J. So this is like 14th or 15th round they have. Absolutely normal. This is blurry. The industry is very active, so it's okay. But in any case, you have all the different types of investors which you may approach, and they are described in this graph from the viewpoint of your progression as a startup, as a company, right? In getting to the market, in getting traction with your business, with catching new opportunities, doing the product market fit, whatever else. Just a depiction to give you a sort of a general overview. I tried to list all the common and some more different options of where you may procure funds. They are not they're not scholarship. This is what it's right from practice. From what I see, these are the real things which are working, and we'll be stopping on each and one of them. I tried to list them in an order from the very beginning, where you bootstrap your business, which basically means that you pull money out of your pocket, right, to fund the initial development, to fund the initial setup of your business, and then going through the competitions, incubators. We have EO incubator here. We know the model, definitely, at least the ones which are residents of the incubator know. We have angels, crowdfunding, etc. So, and I'll tell you some more about other options. You may call them non-conventional or non-VC, but whatever. These are still valid sources for raising funds. Okay. Any questions so far? We'll have a Q&A after the end, but just let me know. Okay. Okay. Bootstrapping and 3F. 3F is friends, family, and fools, right? This is the start of the business. Basically, you pull money out of your pocket. Usually when you do a startup, especially it's the first one, you burn your money rather quickly, regardless of whether you had $1,000, $10, $100, $1 million. Usually, especially it's a first startup, it burns really quickly. If it's your second, third, or whatever consecutive attempt, you usually start with the other people's money, right? You have friends, family, someone you know who is investing. So this is your usual circle to start a business. Probably not worth stopping on that. Okay, competitions. Competitions. I would say what I have encountered. There are two of them. So two sort of locations where you may find them. Some are only online based, and they have offline part only for the finalists. Some are attached to certain conferences. I'll be dropping a couple words about conferences, tech conferences, conferences for startups later. But generally, the competitions where awards are financial for startups, they are revolving around some social, environmental, or any other focus of impact, creating jobs, providing fresh water. So whatever you may think makes a certain impact and does changes for good in the modern world, fighting with the obstacles which there are in environment and social, in politics, whatever. Usually there are these competitions, whatever, with cash prizes. I have listed 3 of them. Jumpstarter is open. I think it's gonna be in February, but applications are now, and they will be due soon. So please take care of applying for that. It's run by Alibaba Entrepreneurs Fund. It will be in Hong Kong and mainland China, I think, the pitching sessions. But you definitely should apply because the prizes are, I think, 1 million prizes or something. 100K cash prizes. 𝒌𝒂𝒏 venture. Last year I was in Amsterdam at the Next Web. There was a final of this 𝒌𝒂𝒏 venture. This prize is run by Pernod Ricard. You definitely know this brand and this company. Despite the devilish or whatever, right, alcohol is one of the sins. So despite of their focus in business, they are trying to promote social responsibility as far as they can do, and this is one of their initiatives. They offer prizes for social entrepreneurs. Visa Everywhere initiative, I think for 2019 it's already closed, but if you're a fintech startup, you definitely should apply for next year's. They have had 2.5 billion. They have provided 2.5 billion in funding to more than 6,000 startups and businesses, right? So it's a very decent one, and you should definitely always think openly about where you may find the competition, how you may engage, and how your startup, your mission may be aligned with the one of the specific competition. Business incubators. I put here a general definition of the difference between a business incubator and accelerator, where an incubator is some certain program which helps early established businesses to have some form, to do a product market fit, to get prepared for the funding, to get prepared for further stages. Accelerators, what they usually do is they onboard you, and then they provide their contacts mostly for your sales and mostly for developing your product, developing your business, so that you can get new clients and new funding. So basically it's all about the money. Who knows what Crunchbase is? Okay, 3 people, that's it. Crunchbase? Doesn't ring a bell? AngelList? No? Okay. So Crunchbase is a very valid resource, which Crunchbase.com. It's a very valid resource for venture capital deals. So the free version is limited. A pro version, I think, costs around $500 a year. So it's not that expensive if you need it professionally. But you can research venture funds. You can research your competitors based on industry, based on year of being founded. Based on you can see how many deals there are in your particular sector. You may research on how many companies have become unicorns. So it has really a lot of, I think it's the most valid resource for venture capital and startups. So Crunchbase has, I opened it yesterday, it had 112 incubator startup programs, which means that these are 112 programs providing finance to incubators. So researching the programs, you can see what incubators they have invested in, and then you can approach these incubators for raising your funds. Only in Asia, there are 140 incubators which are listed, which have deals, and you can see what deals they have, what they focus on in terms of region, in terms of industries, in terms of what their qualifications are, etc. It's a very, very valid resource. Business accelerators. you don't see a map here, but there is actually a map of the world, North America. So in terms of money, the latest data we have usually goes back to 2016, 2017. Since then, the industry has been really active. It's been ballooning, maybe 2x, maybe 3x, but the figures are really not really available for example, for accelerators, right? Total amount of disbursed money, total amount of funds raised. But what we have is 2016 data by GUST. There have been 200 million invested in 2016 by accelerators, almost 600 programs to 11,000 startups. Of them, 3,000 were in US, 3,700 in Europe. This is South America, this is Middle East, and this is Southeast region, Asia, China, that part of the world. What should be kept in mind, there's been a research a couple of years ago about the efficiency of accelerator programs. Well, the research said that as of 2016, out of 170 unicorns, only 9 went through accelerators, the ones like Airbnb, and 8 of them went through Y Combinator, and 1 of them went through 500 startups. So this should be kept in mind that accelerators do very good. They connect you with your clients, especially if you have something with B2B. Accelerators are really good because one B2B contract may allow you to test your product and really unwind your business model. Just to give you an idea of the growth of the industry, there were 170 unicorns analyzed in 2016. The KPMG report, which I mentioned, says that in second quarter this year, only 63 startups became unicorns. The industry is really booming. These figures just give you a general overview of what's happening in terms of business accelerators. Some accelerators provide money. Some of them provide residence. Some of them provide money as grants. Some of them provide money as equity. It's different. It varies. There is no rule for that. So if you're looking at an accelerator program, first of all, I would recommend you to look at who is behind the accelerator in terms of the people, the partners running it, and also in terms of the backers who are funding the accelerator. For example, I forwarded last year one startup in automotive to an accelerator in Berlin, which is established by Porsche, right? So, which in my idea is if you join something which is really close to your industry, then you have a much better chance of getting traction and getting Porsche as your client, or some nearby businesses which come with that in a bottle with that enterprise. Government grants and programs. These are perceived as free money, right? Grants. What should be kept in mind that really a lot of grant programs work usually in a way that the entity disbursing a grant provides it to a certain, I would call it, partner, which then disburses it to the projects, etc. So, for example, there is a program, for example, for compensating interest rate for making your making your house insulated, which basically works in a manner that a World Bank provides certain funding to partner banks here in Ukraine. Then they compensate them part of the interest rate. So these banks may lend money to people directly here in Ukraine at a really low rate to provide environmentally and socially good thing, having a house insulated, something like that. Most of the programs work this way, but some programs work directly with your projects. I have a client who recently, for example, got a voucher from EBRD, a 100K voucher from EBRD, 50? Delfast, right? You know them. Delfast bikes, yeah. Yeah, Delfast bikes, they just, I think a month ago, they had a 100K voucher from EBRD for developing their product because their product is an electric bike, which does good for environment, and that's the sort of manner how it's working. I've put here 3 programs which work in Ukraine, which you definitely might apply to. I put here USAID's agriculture growing rural opportunities, which provides money for developing rural communities and farming somewhere in the far regions of Ukraine. There is a famous program called Horizon 2020. It's been several years up and running. It's not for Ukraine, it's European wide, for providing sustainability, environmental, social impact, all those good things. This program was running, I think, if I remember correctly, from 2016 to 2020. So next year is the last one. They have disbursed, I think, around 75-80 billion already under that program. For the next year, they have 11 billion approved, and they will be relaunching this program in a new format from 2021 to 2027. Lots of businesses have indeed received grants under that program. Also, I put NAFCO. It's a Finland-Ukraine trust fund. They focus on green energy and whatever else there is in sustainable fuel, green energy. So make sure to apply if you comply. Sorry for this poetics. Okay. Angel investors. There is a European Business Angel Network, which collects data on activity of business angels and other people who directly invest. I put here 2 tips. One is that you may meet these people. These people are usually top managers or entrepreneurs or businessmen which decide to devote part of their time and money to developing some startup. From the people I've met of that format, they're usually very active. They usually participate in several projects at a time. They take a rather large equity stake in your business, but they actively participate in running your operations with you. What's really valid is, for example, if you have a telecom startup and you get some ex-CEO of telecom company as an angel investor, this may not only bring you money, but this may also bring you expertise, helicopter view on the industry, and connections. B2B enterprise connections with other players in the market, with suppliers, with some experts, which is really valid. Please do visit different conferences, meetups, whatever. You may find these people at conferences, and also you may seek contacting them through clubs and networks. This business angel network, only for Europe, only in 2017 said that there were 40,000 investments by business angels. They invested 7 billion. I'll not repeat what's there. In Ukraine, I think only UA Angel is part of the business, this European business angel network. I put here also 2 large clubs, non-Ukrainian. There is UA Angel. There is also iClub run by TA Ventures and Task Group. And there is also a platform, Startup Network, which has a really large community of angel investors operating together with them. So please make sure to contact these people. Some businessmen who have established corporates here in Ukraine, they once they have their main business up and running, there is now a process when they get on professional management and go away right from hands-on managing their business. They have time, they have money. So I've seen several startups really effectively raising funds from angel investors here in Ukraine as well. Okay, next one is crowdfunding platforms. I think everybody has heard about Kickstarter and Indie. These are the 2, I would say, main platforms which come on top of your mind when you say crowdfunding. Both of them are for hardware projects. So if you have some B2C, some consumer product, which is a hardware, a piece of hardware, this is the place to go. You can launch campaigns for whatever price per unit you desire for a certain amount of units. The way that it works, that you advertise your product, you have some backers coming in, they have interest, they place money. The platform arranges for this certain amount of money. Then you take this money, you place the order with the producers in China or whatever you produce, and then you deliver to the clients. And this allows you to have your first clients with reviews. You have already feedback from the customers about the product. You can go on and on from that. I've put here several other examples of platforms for nonprofits, for creators of content, for B2C products, personal campaigns, and also this one was very active this year for launching blockchain projects. It's run by the largest crypto exchange, Binance. Largest by volume, I think. Okay. I should say that some crowdfunding platforms, it's worth mentioning that some crowdfunding platforms allow you to raise, in case, for example, with Kickstarter and Indie, these platforms are for raising basically advances from your customers, but there are really a lot of crowdfunding platforms as well which allow you to raise equity. Now, they work mostly the way that they filter the projects. They have a certain network of investors who know that this platform does the filtering, and then the vetted projects are presented to the investors. And once the project gets a certain amount of interest, then you may raise equity also through a crowdfunding platform. I don't know, I'm not knowledgeable about cases where a Ukrainian startup would successfully raise through a equity crowdfunding platform, for example, in UK. right? But this doesn't mean that this never happened, right? I just have never heard about it. You may be the first ones, and this will be a huge plus. Okay, VC funds and family offices. This is a fundraising option which is the most, I would say, which is for the most developed projects. VC funds generally are a more organized and institutionalized investor. Family offices and high net worth individuals, these are the cash pools of a certain family or of certain individuals which are mostly invested into liquid securities or whatever. Sometimes they have certain allocation, 5 or 10% for venture capital. And you just need to have it in mind that VC funds specialize in VC. Family offices, they usually do not specialize in venture capital. This is part of their investment strategy and portfolio. Why I put here a tick mark and a warning sign? Because to make your fundraising trip most effective, you should know several things and differentiate. There are out there funds and offices which lead the deals, which means that they see a project, they do a due diligence, and then they invest themselves. But most of VC funds and family offices, in terms of number, I would say more than 70–80%, they only co-invest, which means that when you have a round, most likely if you have a funding round of 100K or 500K, you will most likely close it in a single check from one investor, an angel investor or accelerator or whatever. But if you're running a later stage investment round, say from over $1 million, then usually you will have several investors coming together, writing checks of no more than $1 million, say. And you will definitely have one lead investor, which will take your board seat, which will do the due diligence, which will run all this legal thing on you, and then you'll have some others join in. Usually lead investors have a pack of co-investors with them, which invest alongside with them. Sometimes limited partners, which are backers of VC funds, co-invest directly with the VC funds. But what I'm trying to say here is before contacting a certain VC fund, check whether they do proprietary investments themselves or they just co-invest with other funds. Sometimes they reply you. Sometimes they may put you on a blacklist forever, right? If you nag them too hard, just do your research before contacting someone that they really execute deals on their own. Okay, there are certain VC funds and investors which have a generic focus, but most are sector specific, which means that they have, for example, AI, fintech, and medtech, and that's it. Some say, okay, we understand apps, and we invest mostly in apps. This doesn't mean that they will not consider investing in something very interesting out of their strategy, but this means that most likely you'll be successful if you have, I don't know, a medtech project. Then most likely you'll be successful raising funds from the fund which does medtech, medical, pharmaceuticals, whatever. Same with the regional stance. So really few VC funds and investors invest on a global scale. Most are regional or even country specific, right? So if some fund is based in Ukraine, then most likely it will look at Ukrainian startups. If a fund is based in Silicon Valley, then I would bet 90% of their deals will be in Silicon Valley. Now again, they may consider something out of their geography or whatever, but most likely there will be some regional attachment. Some funds in Europe do all Europe, some do only their country, right? So they say, okay, we're in Netherlands, we do only Dutch companies, or we do Dutch and Belgium companies, that's it. This is the market we understand, this is the market where we have connections, this is the market where we have most value added for the startup which we're investing in. One very important thing about institutional investors, because if you're procuring money from a business angel, then most likely you will be looking at the person's background connections and at your comfort of working with this person, right? If you are looking at institutional investors, then the most critical thing to consider is the ability of this investor to help you raise next rounds. So this means that the VC fund which you're attracting should have a name which will allow you to reach further, right? To reach to the larger tickets which are mostly based in Silicon Valley or in Europe, whatever. But these names and these institutional investors should help you. This is the very important part of your further marketing in your next rounds at your more developed stage of growth. One more point is that there are, I would say, majority of VC funds look only at late stage startups. The ones, usually the sort of borderline is revenues, right? So you say pre-revenue, or you have a startup which has a revenue already. It's a question of a product market fit. It's a question of maturity of a project. I've seen projects which have which started generating revenue and profit with 10K investment. I've seen projects which have had several millions of investments and still they don't have $1 of revenue. Last year and 2 years ago, ICO boom was very, very hot, right? And projects were raising tens, hundreds of millions without having any sales. It may occur from time to time, but still, when approaching institutional investors, you should understand that some of them specifically focus only on the projects which have revenues, right? And if you're pitching them your idea, you most likely are wasting your time. Okay. What the timing? Okay, we're going smooth. Some more food for thought. I put here Tesla because I think that it's a really important example of funding your company with pre-sale. Because I'm not sure about purchasing a Tesla now, but several years ago when it all started, you could buy Tesla only if you pre-order it and 100% prepaid. It allowed the company, which was already struggling with the funding, to actually go forward and allow itself research and development expenses and set in production, which it definitely wouldn't afford if it used another model. What is also very important generally in raising funds for a startup is that really a lot of projects stumble upon a question of a working capital, especially if you have some consumer product which is physical, some hardware, or even enterprise product, whatever. But if it's a physical product, then you most likely will have working capital problems. You will need a certain amount of capital, which you will be taking, doing a prepayment for the production, waiting for some time once it's produced, then shipping it to customers and getting the money from the customers. You generally, from the corporate finance theory, you shouldn't be using equity money for funding your working capital. And working capital, I'll stop on that later, is well financed and should be financed with loans, with debt, with leverage. So what I'm saying is that if you manage to collect money from your customers earlier, this is very good. It's tough from the marketing perspective. People like to pay after they receive a good or service, but this is not a rule. Even with a check of Tesla, it's possible. So it's possible for your business as well. The next thing to think about is equity of services, strategic alliances, which ranges from the fact that you have a friend who has a spare office where you can work, and you can offer this friend a stake in your business or whatever, some other terms, not paying actual money and getting office for your development. That's one thing. And employee options come also here, right? Because you don't have enough money to compensate your employees at the outset of your development. You offer them share options so they can capitalize on the growing equity and participate in success of the company. Strategic alliances are also very, very good. So if you happen to know a large enterprise which has a need in your service or your goods, it's usually very good working alongside that enterprise business, having a pre-order from them for your system, which will provide you a proof of your concept, because then you'll have someone from the real business providing you feedback on your product and basically being your first customer. But secondly, they may provide you also with some corporate things attached, a spare office space, or a prepayment for development or whatever. Conferences and communities. I put here Ukrainian tech events worldwide. I'm not sure if you know about that group. It's a group of generally of founders of startups. Join the group. The people are really friendly. They share news about conferences and events around the globe. Share tips, what to look for, what to do, what not. For example, I think in October or November, there is the largest conference in Portugal. Last year, it was attended by 70,000 or 80,000 people. It's called the Circus of Startups. It's got really a lot of different investors coming from all continents. So please make sure to attend it. Also communities. I've spoken earlier about business angel networks. There are several investment clubs, at least that I know around Kyiv, which have business angels, which have professional investors, which have people around the industry which may help you. Please don't pass by lawyers or different advisors. Sometimes this may be the person which will introduce you to your investor, or to a person working for an investment institution, which will help you in the end to get your funding. Speaking of banking financing and VC loans, I mentioned that leverage and debt in general is very good for financing with your working capital. It's usually not very good to finance your research and development with a loan, because then you get captured by the timing, right? You need to repay your loan, but you are never sure when your research and development costs will be realized. You never know how your product will be selling. So it's generally, from the corporate finance standpoint, it's better to finance your development with equity money, and your working capital, your immediate means with that. Some VC funds, some business angels, they offer VC loans, which may come in the form of a secured or unsecured loan. Usually it has high rates, but your business model should account for that. In terms of bank financing, generally for the early stage projects, banking finance is really tough to get. You usually don't have assets to use as a collateral. You usually don't have a track record of several years of operations to show to a bank to demonstrate that you are developing consistently. But please keep in mind that banks don't only offer loans. Banks also do guarantees. Banks also do letters of credit. So, for example, if you are, I remember a talk which I had 2 months ago with a Chinese producer, where basically what we negotiated is that we replaced 30 days prepayment with a letter of credit, which would activate only once the shipment comes to the distribution hub in Europe, in Netherlands, I think, which allowed the company to cut short this 3 or 4 months for ordering the raw materials, getting the production, and shipping it to the European port with the letter of credit. So please keep in mind that banks not only do loans. And what's also important is that the banks work in a way that if you go to a bank and ask for 10 million in a loan and you're a new business, then your chances of getting it are really close to zero. There is no magic in that. But what's proper in working with banks is that you open an account, you show a development in your account, the growth of your operations, your real business. The bank gets a feeling that they control your sort of business processes and financial operations. Then you might apply for an overdraft, which is unsecured, right? Even if you get 100K or 50K or 500K, whatever, it's still a great win. Once the bank issues you some form of credit, even if it's a 50K overdraft on your account, then this starts building your credit history. It's substantially much easier, and I would say logarithmically, right, exponentially, for a bank to expand the amount of credit which it provides to the business than to provide a new credit. So what you do is you open an account, you show the movements, then you apply for an overdraft, you get whatever credit you can, and then you expand it. Then you replace the overdraft with a credit line, and then you go developing your relationship with your financing bank. This especially works in Europe. This especially works in America. I haven't had yet much experience with Asian and Middle Eastern banks, but I assume that they work the same way. It's a question of developing your relationship and moving step by step. What's also worth mentioning, I think I mentioned it already, is that large corporates usually have loads of money. Usually they have foundations attached, and they have corporate accelerators and corporate funds through which they do invest. I put here City Ventures, Bosch, and Vodafone, but also Virgin Atlantic has lots of investments, and I think if we name, we had Alibaba Entrepreneurs Fund early in our presentation. So any corporate entity usually has some sort of investment institution attached. They are very. This is a very good point if you have a certain focus of your startup. For example, I mentioned here an automotive startup which I recommended go into an accelerator in Berlin backed by Porsche and APX. So if you have some instrumentals, you may seek funds from Bosch, right? If you have telecom, then probably Vodafone Foundation should be on your list of investors to approach. Okay. Are you tired? Okay. Break? No? Good? Okay. Running further. Okay. Okay. I'd like to share also some keys to success. Very simply, I thought about it for a couple days to make it maximum simple. The first one is proximity, which means that you should be really close to your investor. I would say that your chance of getting funding from a venture capitalist somewhere in New Zealand is close to zero. You have much better chances of getting finance from an investor in Poland, in Ukraine, in Europe, or even in US than in New Zealand. You have higher chances of getting funds from Ukrainian investor than from an American one. It's really important. Some, as I mentioned earlier, I know really few ones which say, okay, we operate globally. Really few ones. Most of them operate in certain jurisdictions. I listened to an interview with one of Andreessen Horowitz founders, which is a well-recognized VC fund from US, and they were discussing with the interviewer that they have recently closed Brazil as a investment destination. They have opened Brazil at some point of time, but then they closed Brazil as investment destination. So, which means that any emails coming from Brazil most likely will be not answered at all. So look for someone who is close to you, for someone who you may reach, for someone whom you get personally introduced. What's really important in the VC world is introductions. I think it was. I don't remember exactly what fund that was, but also one of the, say, top 10 funds. One of its managing partners mentioned that they do look at emails coming to their invest at whatever email address, but they have done out of several hundred deals for the past 10 years, they have done 0 from the ones coming in an email. So you should definitely seek a personal introduction to people, to decision makers at VC funds, to business angels, etc. Doing cold calling doesn't work at all. Which is my next point is statistics. Still, if you if you send 100 emails to potential investors, you will probably have 5 to 10 answers. If you take 100 answers, which means that you need to send 1,000 emails, then most likely you will have 100 answers, among which 5 to 10 people will probably tell you, okay, we are ready to consider, or they will probably tell you, okay, we may introduce you to someone because we do only later stage deals, or we are out of the geography but we know someone. And this is really important to catch on that and build the relationship. What's really important also to mention about the relationship, building the relationship, is that usually from meeting your investor to actually getting a funding, you should have at least, in my experience, at least 3 or 6 months to develop the relation. So you meet a person, you make your pitch, and you should be really well trained to make your pitch. And then in some time you meet, the person asks you what's the development of your project, and you should have some development in your project to boast, right? To say that, okay, we have this traction, we have done this and that, we have learned this and that, we are going on our plan. It's very important to reflect on that and to build a relationship with your investors. Returning to statistics, I would say that there is a startup. I won't say the name because I think we're public in Facebook, but in any case, it's not a secret, you'll probably recognize it. It's been from 2014 till last month. Crunchbase has a record of 9 investment rounds, which I think is very successful for a startup from Ukraine. When I asked one of their key, they have 3 founders involved in the business. You probably know who I'm speaking about. It's a hardware startup. When I asked one of their founders, what's the recipe to success that they have had 9 rounds, including Kickstarter, including crowdfunding platforms, including professional investors, whatever. He told me that actually out of 3 founders, 2.5 are doing fundraising, and 0.5 is working with the team for the product and for developing the business. So statistics do work if you devote substantial amount of time, if you really listen to the feedback which is provided by the investors, then you have really high chances of getting your funding. I would say that we were in November, December last year for 1.5 months. We were on a road show in Asia with a startup. It was Hong Kong, Singapore, Bangkok, Macau, and Shenzhen in mainland China. We have had, I think, over 100 different meetings, and the pitch of the pitch story and the introductory story was absolutely different after 1.5 months there than it was at the beginning, at the outset. It was absolutely polished. The pitch deck looked absolutely different because we learned on the way, we listened to the feedback, we learned something new, especially, for example, about competitors. This is something which is really awkward to find out from a potential investor, right? When they ask you, okay, you're building, it appears to me you're building a next Uber, and you're like, what's Uber? Okay. But in any case, you should be really attentive, listening to the feedback, and building up your statistics in terms of what people investors like and what they don't like. One important thing also is that investors, you should understand that just like a consumer, when it does a purchase, then 90% of the purchase is emotional. The same is with investment. Investors, they provide funds emotionally. Figures, business plans, whatever, etc., legal structure is there just for them to have a feeling of safety, right? And that they are doing the right thing, that there are no sort of red flags involved. But the investors, they provide money emotionally. This is a really important thing. And this means that from a marketing perspective, you should provide them with something lucrative. They should see that there is a really good opportunity to earn money and to be involved in something really good. Because for investment funds, of course, the key metric is the return that they provide to their investors. But for their marketing and for them building their pipeline, it's also really important that they have really successful stories and that they're involved in really successful companies, ultimately becoming unicorns with a capitalization of over $1 billion. Okay, so that's with the tips. I think we're coming, for a Q&A. So please let me know your questions. Yes, please.
Just a little bit about the process. So what kind of equity agreements there are?
Just guys, sorry, let's use the mic here. Okay.
Thank you, Andrew.
Thank you. Thank you for your presentation. And specify a little bit about the process. What kind of agreements there are with equities or not equities? What happened if there are several investments? What happened if some investor would like to leave, for example?
Mm-hmm.
Or how projects without any customers, how they are evaluated and so on? Thank you.
You have several questions.
It means that I asked just about the process. I mean that
Okay.
It's not funding, like how to find funding, how to process it.
Okay. Quickly answering your question, I'll provide a link to the presentation. It's in Google Slides, so it's online. Okay. I can, or the organizers may send it to you. Yeah.
We will share all the slides. If you're online and you want to have the slides, you can write to our Business Incubator's Facebook page in order to get all the materials you want. Thank you.
Yeah. Okay. Now coming to your question about the process. In terms of the process, the more developed stage, right? More developed stage you go. Okay, let's return to this one. So for friends, fools, and family, most likely you will get money without any documents or with a simple IOU, right? Coming to the VC funds, in terms of the process, firstly they evaluate the business, which means that there will be several meetings with the founders of the project, where they will ask questions about the business model, etc. If it goes well, then you enter the stage of due diligence. At this stage, your financials, your legal, all the skeletons in all your closets will be examined and pulled out to have a look. Your backgrounds of the founders, the team, what's the location, etc. At this point of time, it's not only important to make sure that you have your financial books in order and your code as well properly in order. It also is very important that you, when you have earlier investors, that you don't have any troublesome names in your cap table, right? So if you have, if you're deciding whether to take money from a publicly exposed person, ex-minister or parliamentary member or whatever, right? It's better not to take this money if you are planning on raising next rounds than to do. After the due diligence phase, usually if it goes well, then you have a soft commitment from investor. It may be expressed in a letter of intent or a term sheet, right? If you are raising a large round, then most likely in parallel you will have a process of getting more co-investors, right, to build up the whole round in smaller checks, or you may need, there may be some time between a term sheet and the documents, the transaction documents themselves, so that the transaction documents may be prepared and the legal structure may be prepared for the investment. That's sort of say the most advanced process. The simplest process is an IOU, right? Just as a slip. There are very lot of deals happening through a convertible note. Some happen through most of them happen through US, and most of them happen under the jurisdiction of Delaware, because Delaware is some sort of an internal offshore in US. What needs to be, what you need to keep in mind is that Delaware legislation is really tricky in the fact that usually, from a legal standpoint, if you put something stupid in your agreement, then usually you have a statute or a law protecting you from that stupidity, right? Because if you say that, okay, we have 100% and that founder has 60 and this founder has 60% as well, then probably you will have a statute which will say, okay, in this case, most likely it will be 50-50, right? Because you messed up with the figures. The laws of Delaware are really tricky because the way you put it in your shareholders agreement, the way you put it in your investment agreement, this is the way it will be read in court. Sometimes it plays really troublesome and adversely with the in corporate disputes. Also, I met a friend today who runs a platform here in Ukraine which provides template documents, different ones, from agreements to some whatever internal documents for corporations. And he says that recently there was a pickup in requests for option agreements and investment related agreements under Ukrainian legislation, because a couple of years ago we have had a change to our law on limited liability companies. It now allows for shareholder agreements, so there have been some developments. Still share options are not in the framework, but you can design those documents under Ukrainian law as well. But if your business will be selling in US, it's usually really good to open a company in US, and you may have a convertible note with the company, and you may have a convertible note which will say that the founder undertakes to open a company. I think it's 𝑦𝒏𝒂𝒕𝒏𝒈 which has the template agreements. They're called SAFEs, Simple Agreements for Future Equity. I think there are 4 or 5 or 6 options of them on 𝑦𝒏𝒂𝒕𝒏𝒈r's website, and 𝑦𝒏𝒂𝒕𝒏𝒈r is #1 accelerator in the world. You may download them, and these are the boilerplate templates which are used then across the world by everyone. At least I see that the structure, when I get a SAFE agreement from any lawyer, usually it follows the SAFE agreements from 𝑦𝒏𝒂𝒕𝒏𝒈r. That's about the process. You also had another part of your question.
Yeah, I asked about evaluation. what happened if there are no clients? If so, what kind of evaluation happened?
Your question is how
How to evaluate if you don't have any turnover, right? Or
Yeah, sure. But I mean that. Yes, I heard that the funds evaluate the project themselves, but do they do that emotionally, as you said, or it is something
Okay.
that needs numbers?
Yeah, clear. Okay, so you always have options. Sometimes you go to an investor with the pre-money valuation and the share for a certain investment, which is an equation, right? Sometimes you just go with the desired figure and await from an offer from a VC fund. Sometimes the valuation is fixed. Sometimes, for example, in a convertible note, the valuation may not be fixed. So, for example, a convertible note may say that, okay, now this amount of money is invested, and if the valuation at the next round will be X, then the implied valuation on our transaction and the amount of shares to which this convertible note is exchanged is Y. But coming to your question of how do you value or appraise a startup which doesn't have revenues, right? I would say that there are no general rules. Investors usually have their rules of thumb, which I wouldn't say they're emotional, but they're customary. So, for example, a VC fund may say, okay, we are looking at the projects which have MVP, but yet have not went through a product market fit, right? So they are selling something, but still their cost of acquisition is client acquisition is not 100% clear. So this is the phase. They have revenue, but they don't have the proved model, right? We're issuing to these type of startups checks from 100 to 500 at a valuation of 5 million. Or they may say, okay, we have early stage startups which will get to their MVP in 6 months. And we're issuing them 100,000, 40,000 at the outset, and then 20,000 each consecutive months. And we are doing that at a valuation of 1 million. I have read when I started my corporate finance career, I read Aswad Damodaran, which has a book thick like that size, describing how you value a company from different valuation approaches. But in terms of startups, I'm not sure that there is some agreed methodology of how you do that. So there are some customary rules of thumb which investors use, but I wouldn't say that they are set. Also, some transactions are structured in a ratchet mechanism. So which means that, for example, an investor may get say 70% share in your business, and you do an earn-out, right? So, which means that certain targets are fixed in terms of revenues or in terms of profitability in the months, in half a year, in a year, and the way you meet these targets, then your shares are released back to you from this sort of virtual pool.
okay, any more questions? Questions? No?
Questions? No? Shall we dance?
So I have a question to you. Did you have any case when it was some kind of competition for the startups, and startup win the number one prize, so to be the winner, but didn't get the fundraise because they didn't agree with the core initiator, the amount of money. Do they need to mention that in their further, investment round or not? Because it's not a successful.
It's a question about competitions, a contest, or
it's a question about the story about that startup. Do they need to mention that in their paper later on for another investor that they won the number one, for example, place among the I don't remember 70 startups, but didn't get the money? Or that's not successful one, and they couldn't mention that.
do you mean that by winning some competition, does it guarantee you getting further funds?
Yeah.
Not necessarily. Sometimes, and I would say that this generally winning some prize or a competition is a really good thing to uphold your development, right? To get through this valley of death, which we had here, right? But it should not be seen as a key capital for development. I would say that these prizes most likely will be, I wouldn't say insignificant, but they will be this valley of death. They would be rather small as compared to your general size. So the prizes in startup competitions usually are 50K, 100K, which will probably be a very good help to your project, but will most likely not save it from not able to get the market proof in a half a year or a year, right?
I mean that later on we are coming to the next round, and for example are attracting the new capital market for the bigger amount of money. Do we need to mention that we win? So probably to the short, so it's plus, right?
Absolutely. If you have reputable investors and backers, if you have reputable investors, it's good. If you have won certain competitions and got some prizes, it's a plus. If you have somebody, not your investor, but somebody from the industry who is backing you as your advisor, as your partner, as whatever, it's also very good. It's a part of marketing. It's a part of your sales, and you're selling your equity stake in your business, and this is also a sales process, right? The investors, I repeat, they do emotional decisions. they get affected. They get affected really a lot. This doesn't mean that you should be overselling, right? It's much better to undersell than to oversell, right?
Okay. Any more questions? I have another question to you about the difference between Ukrainian investors and foreign investors, because what we're seeing here now that our quite big or middle-sized corporation, they are starting opening the fund. For example, 𝑑𝒂𝒓𝒕𝒏𝒂𝒈 today or yesterday, so they announced $100 million to attract the startups for the
venture
farms, right? Farm type startup or medical type startup, 3 direction, as well as, for example, Alpha Bank. It was like 1.5 years ago. So what is different, and what is your recommendation how to win in that case of competition?
We all struggle with labels, right? So a Ukrainian fund or international investor is a label, which
it's more about the corporate venture fund compared to venture fund, which traditional one.
Yeah, I see. If we're speaking about differentiating corporate ones from the generic ones, right? For the ones which have capital from financial institutions mostly. The corporate funds will most likely invest into something which is aligned with their strategy. So most likely, 𝑺𝒌𝒚𝒓𝒄𝒌𝒆𝒅 is a pharmaceutical company, number 2 by revenues in Ukraine. Most likely, it will be investing in medtech, in health, in life science, or whatever in that. I would doubt that they would be investing in fintech. I don't know. I learned it.
Right. Yes,
I learned
that's
it from
only
you.
the cardio, then medical and biotech. That's written.
Yeah. So fintech probably, and But if it's an AI which can be used, right, in doing pharmaceuticals, it's very good. I actually learned 2 days ago that there is some AI which recently successfully developed a vaccine for influenza, for flu, which is now being tested because the initial tests ran very good. The AI analyzed large volume of data on the vaccines, on the different forms of flu, and synthesized, right, the molecule, which then was done physically, and the tests are very good. So returning to your question, between the corporates and internationals, and also I would say that in terms of labels, a Ukrainian investor or international investor, there are differences, but you may have a fund here in Ukraine which has a really global thinking. You may have a fund in Baltics, which may be, or Scandinavia, which may be even much more open to Ukraine than a Ukrainian one, to Ukrainian startups. You may have the funny story is that in past 2 or 3 months, I have had several startups from Israel contacting me, looking for funds here in Ukraine. And my question was, okay, Israel is the country of startups. Why are you looking for investment capital here in Ukraine? And the answer was that for Israeli startup, it's much easier to get funding somewhere out of your domicile than inside. I haven't seen really a lot of US investors in Ukraine in terms of VC. They've been around some European, but they are looking very carefully. I know that I haven't had experience myself, but some startups I've talked to had a really good experience and feedback with Scandinavian funds. Also a friend of mine is now raising a fund. They should be running, I think, in mid-October with Polish investors, but for Ukraine. So you should look openly, and sometimes you have people here, representatives. Sometimes you have people coming to certain events. So yeah, be brave and look for capital.
Some more questions? Because I just have last question probably to you.
May I have some water, please?
Yes. Do you have a question? No?
Could you find the water? Or I will find the water. You will find? Okay.
Thank you very much.
So thank you, Nastya. Another question, probably last one. That's what we often heard from huge amount of startups. That's about how to balance actually the organization place or organization country or country of opening startup for Ukrainian startup. Because 10 years ago, everybody tried to open their startup somewhere in Silicon Valley, because the majority of investors came from there. Currently, UK, for example, opened the huge funds for the startups, and they are also interested in that. And they are demanding to open startups on the territory of UK. Yeah, the most, I'd say, the huge amount of startups was opened in Estonia because it was quite close, and you can do it online, and it was not so costly, so it was quite also relatively low from the cost side. It was popular like 3-5 years ago. Currently, Ukraine have, an interesting position, especially after the announcements, Ukraine in smartphone or something like that, the new wave of a new president and everything connecting to that. So do you think that it would be a change of perception, startups which can be opened in Ukraine, or still because we are not in a common law area, so it would be better to open somewhere close to the investor, like a UK, China, probably Singapore, Dubai or still US, or it can be nowhere. So what is your, from the venture capital, from the investor point of view, from the first round of investment, which is angel investment or first seed investment or something like that, what is the best place for the registration of the company when it is still young, still small, but quite aggressive and active?
Thank you for the question. There are two parts relating to that. The first one is the corporate structure. The second one is the operations. I would say that from the standpoint of operations, you should be setting up operating entity in the domicile where your core market will be. This is the same works for intellectual property, right? If you're going to US market, then you definitely should register your trademark in US, and then when it's registered, you should populate it across the world under the WIPO convention, right? But the first country of registration should be the one where your market is. The same works with the operating entity. If you're set into Europe, then any European domicile works. Not sure about UK, because with the Brexit, it's coming really tricky. But if you still advise with your lawyers, there are some tweaks to that. I heard that even if the Brexit goes on and Britain leaves the EU, firstly, the process of Britain actually getting out of the EU legislation will take up to 10 years. That's one thing. The second thing is that you have domiciles like Ireland and Gibraltar, for example, which most likely will be friendly for EU and for Britain both.
China and Asia?
China and Asia. I wouldn't say that you. I would doubt that you would be opening a company in mainland China, but for example, one of the funds which we talked to in Shenzhen, they say we have government money, which implies that we should be investing only in mainland China registered company. And I think Shenzhen has some sort of sandbox arrangements, just like UK does, right? Because most of jurisdictions, they will have sandbox arrangements for startups, so they will have easy registration for new businesses, especially if you declare that you're a startup, or they will have some regulatory frameworks which will allow to provide you some trial license, right? For I think UK has a fintech sandbox which allows you to basically have 1 million of turnover under a really simple license, really simple regulation, so you can test your project before going into the real business environment. So this should be utilized very heavily. A lot of jurisdictions have how do you call it? Favorable regimes. They may provide you a discount for certain payments. For example, I think, as far as I know, there is a grant by Invest Hong Kong for registering a trademark in Hong Kong. I think they cover 100%, or I think they cover 100% of the price of the registration fee. They fully cover the registration fee. So look for that as well. If your startup is focused on US, do operational company in US. If in Europe, do it in Europe. If in Asia, then most likely Hong Kong and Singapore will be your destinations. Mainland China will be tough, and also Philippines and Malaysia most likely will not give you enough reputation, right, to operate in these markets. But Hong Kong and Singapore are very good jurisdictions. Hong Kong itself is a very friendly destination for investment. Invest Hong Kong. We have met them several times. They are really active. They are really open. They are ready to provide you They're ready to provide you with contacts of two incubators which they have set there. One is software, one is hardware. They have really a lot of programs for medtech, for registration of trademarks, of companies, whatever else. They have lots of contacts of investors, etc. If you plan to be operating in China, then Hong Kong probably is very good to choose. In terms of corporate, I would say that this is in terms of operations. In terms of corporate, as I mentioned, US, Delaware is probably a number one pick. Some startups are specifically registering in Germany. And Germany is very tough in terms of corporate, where to get a new investor on board, you will probably have a seat of 5 to 6 hours at a notary, because under the German law, the notary has to read out the full agreement and make sure that everybody of the signing counterparts understands the agreement, which is really tough in terms of costs and your time. But this may save you from any fraud or whatever in your corporate structure. I would say that investing in a Ukrainian LLC by a foreign investor would be really exotic. I haven't heard of such cases because still we don't have common law. B, the regulatory framework is full of loopholes indeed, because our legislation is really new. It's from 1991. It has really a lot of corporate matters trailing back from the 80s and the Soviet times. And also we still, and everybody knows it, it's not a secret, we have a really painful experience in defending your corporate rights in courts. Even Russia is much ahead of Ukrainian market in terms of legislation. I think I even heard from Belarus-based startups that they do local domiciliation of corporate affairs.
One more question.
Great.
Sorry, if I may.
Please.
Yeah. Quick question. What's your take on Ukrainian ecosystem, Ukrainian startup ecosystem? What's working, what's missing? And also, if you could relate it towards European counterparts, because as of now, we are tied between Madrid and Berlin right now. Thanks.
Thank you very much for the question. Can you specify about Madrid and Berlin?
Yeah, there is a rating. So in 2018, Ukrainian Kievan ecosystem was ranked number 34. 35 was Berlin and 34 was Madrid. So what's your take? How we gonna progress, regress? What's on the market?
Okay. I'm not sure about that. I don't know about that rating. I don't know about Madrid. I know that Berlin is very active. I know lots of funds and accelerators, and the community is really active there. In terms of returning to Kiev, to our common grounds, the ecosystem is developing rather quickly. If several years ago the largest VC funds were 100% devoted on co-investing out of Ukraine, now we have some amount of venture funds which invest here in Ukraine in early stage in Ukrainian businesses. We have several incubator programs. We have the courtesy of EO for hosting this lecture. There have been several attempts of accelerators. I haven't heard of any Ukrainian unicorn coming out of Ukrainian accelerator, but as we know the statistics on Preply, there were only 9 unicorns coming out of accelerators globally. So I would doubt that 𝒂𝒏𝒈 is a 1 billion company. I think their valuation is 30, or the last round was 30 million. But okay, and 𝒂𝒏𝒈 went through an accelerator.
From Happy Farm in Ukraine.
Happy Farm, right? Okay. So in any case, the ecosystem still needs a lot. What really helps is that there have been really a lot of projects for establishing co-working spaces, which usually are a good next step for the people coming of IT outsourcing industry. What's been debated lately is that we have, especially for tech projects, IT projects, we have really a lot of people who have been experienced in IT outsourcing companies. They have certain amount of expertise, they have certain amount of money, and most likely in the coming years we'll see these young people getting out of these IT outsourcing companies and establishing their startups. These co-working areas are really good for them. These are the ones which may gather. I know that Lift 99 does really a lot of gathering of investment, of investors and startups and events around that.
Creative Quarter, Unit City.
Creative Quarters, Unit City, 𝑖Hub, 𝒂𝒏, Hub 4.0, you name it. These are the sort of focal points, right, around which the system is revolving. There was rather recently news about the fund, the governmental state-based fund, which will provide grants to the startups. I'm not sure if it's working or not.
It is on the Minister of Finance, so it was announced, but it will be officially, I think, start sharing since September.
Okay. Okay, because I know they have their supervisory board, but they will be forming their committees and doing their operating manuals, whatever processes. It will take some time. So the system is developing. Returning to your question of how it may compare to Madrid or Berlin, I'm not sure about Madrid. I'm not acquainted very well, but in terms of Berlin, I would say that Berlin is much more active than Kyiv in terms of the ecosystem. Probably I'm not sure what this rating which you're referring to took into account, but I would say that in Berlin the amount of activity is much higher, and it's in Europe one of the key centers of VC activity, just like London. There is a certain activity in France, but it's a really separate world. I would say that French VCs usually tend to invest strictly in French companies. So it's...
Sergey, if I understand correctly your question, so probably it is about what we are missing, right?
It's like
What's missing in Ukraine? Because you said, okay, Berlin is much more active. Why?
Okay.
Because we have a lot of, startups event. We have a lot of co-working.
Yeah.
We have also venture funds, which is coming. You mentioned that. So
yeah, but let's talk about what we're
missing.
Don't have, right?
Yes, please.
In my opinion, what we still lack is a decent amount of startup initiatives which will build the statistics. So I heard from somebody that there are around 1,500 startups in early stage now in Ukraine.
Review, analytical kind of data, statistics.
No, I would say that when we have not 1,500, but when we have 15,000 teams at once, yeah, then we'll have much more, then we'll see the same success rate, but we'll have enough numbers to build up our statistics, right? Because now we have PetCube, 𝒂𝒏𝒈,
Because are sitting in Estonia, in Delaware, in somewhere else.
Yeah, and some costs you can bear only when you have volume, right? When you have volume, then you can execute some things which you cannot with only one startup. That's one thing. The other crucial thing is building up the community of business angels. This is the real big pain. The business angels mostly are experienced businessmen, I would say 40 plus, which have a certain template of thinking from the 90s and whatever. Sometimes it's really tough to negotiate with them the control mechanisms in the company. They tend to over control. They tend to think very straightforward. For a tech business, this is not always a good thing. I see some amount of young entrepreneurs who have earned already also starting investing, but it's not enough. And also there is I haven't heard much of education for business angels. This is the thing which I'm personally thinking about, and probably will be setting some program for that in fall or closer to the winter. This is something which is discussed already, because incubators is good for the startups, but for business angels there is really no education programs, and they were not ready to study at all previously. Now there is certain amount of interest of getting onto that.
Thank you, Sergey. Any more questions? No? Okay, then
thank you very much.
Nastya, just one comment, and then I will ask Sergey things.
Thank you. Thank you, Sergey.
Thank you very much.
Thank you for coming. By the way, Sergey is one of our mentors at our business incubators. One of the great ones. Yes.
Thank you very much.
And here's, thank you.
That remark was subjective, but thank you very much.
Well,
about the best.
All our mentors are the best and great and etc. By the way, we're about to announce the next application cycle for incubators. It's going to be up maybe this week, maybe next week, no later than next week. So if you're interested to learn how to grow your business, how to develop your business, please, I kindly encourage you to apply and try yourself in building a great business. Okay? Thank you. Oh, you can learn about our business incubators on our website in UA, or you can also find us on Facebook. If you have any questions, any questions, please write down. We answer there every day, mostly.
And if you have any practical questions, so you can ask also me. I'm the coordinator of Kyiv, incubator, our business incubator. My name is Nadia. So please, if you have any questions, please. And thank you, Sergey, very much for today's session. I hope you enjoy. And just if you can look at our website, so you can see any other open lectures. So we'll have some interruption for the Facebook. Yeah, we'll have some interruption for a couple of weeks because of announcement New Circle. But later on, so we'll have a next week with the new open lecture. Thank you. Thank you very much to all of you.
Thank you.
Have a great evening.
Thank you very much.